Alphabet just closed at around $252, up 34% this year and 55% over the last 12 months. But with OpenAI's new ChatGPT Atlas browser now going straight after Google Chrome, the question is, can Alphabet stock keep climbing, or is this where the cracks start to show? Because let's get real, right? This isn't some small startup taking a swing. This is OpenAI, the same company that already flipped the switch on its head with ChatGPT, and now they're coming for Google's most valuable data pipeline. You see, Chrome isn't just a browser. It's how Google collects massive amounts of user behavior data, the lifeblood of its $200 billion ad empire, and with ads making up 85% of Alphabet's latest revenue, any threat to Chrome hits everything. Now, most people think that Google's untouchable, but I'm watching one early signal that could tell us whether OpenAI actually has a shot of dethroning them, and it's hidden in a part of Alphabet's businesses a few investors are paying attention to. Hey, what's up? I'm Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That's a good thing. I'm not here to push anything. I break down the numbers so retail investors like you and me can make smarter, more confident decisions with our money. In this video, I'm going to show you the real risk OpenAI's move poses to Alphabet, what Wall Street analysts may be underestimating, and the one data point that I'm tracking that could decide whether Alphabet stays a strong buy or starts to slip. Let's get into it. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. Alphabet is the powerhouse behind one of the most influential ecosystems. It's not just another tech company, it's the digital backbone of modern life. As Google's parent company, they oversee a broad portfolio that spans search, cloud, hardware, and a growing range of future-facing technologies. Alphabet is part of the Magnificent Seven, together with Apple, Microsoft, Amazon, Meta, Nvidia, and Tesla. Now, you've probably heard that name before, and for good reason. These are the giants that are steering the entire market. So you could say that when one of these companies, well, sneezes, the entire market catches a cold. And Alphabet is right in the middle of it right now. One of the company's businesses is Google Services. This is the engine that powers Alphabet's financial dominance. It includes household names like Search, YouTube, Android, Chrome, Gmail, Maps, Drive, Photos, and the Play Store. Most of the revenue here, though, comes from advertising, both brand campaigns and performance-based ads that leverage user data to deliver highly personalized experiences to folks like us. In other words, the better Google understands you, the more valuable its ads become. And that's where the money flows. But ads, they're not the whole story. Google's been steadily expanding into subscriptions and devices with products like YouTube Premium, YouTube TV, YouTube Music, NFL Sunday Ticket, Google One, and the Pixel lineup, adding new layers of recurring revenue. And recurring revenue is gold in the investing world because it smooths out quarter by quarter volatility and builds a predictable cash flow. And Google's been quietly building a second engine under the hood. Then there's Google Cloud, which can be considered the company's growth engine. This segment earns primarily from consumption-based fees and enterprise subscriptions for infrastructure, platforms, and AI-driven software. It's Alphabet's gateway to long-term scalability, powering everything from app development to advanced data analytics for businesses all over the world. On top of that, Google Cloud delivers AI enhanced cybersecurity to defend against ever evolving digital threats, and a suite of purpose built smart apps, which are intelligent, machine learning driven applications that streamline operations and accelerate innovation across various industries. And here's the kicker: every improvement in AI security or smart apps makes Google Cloud stickier for enterprise clients. Once you're in the ecosystem, it's very, very hard to leave, and companies rarely do. In short, Alphabet is more than just Google search. The company is an innovation platform that touches nearly every part of the digital economy, from ads and entertainment to AI and enterprise computing. So when people call Alphabet a tech stock, I think that's underselling it, because Alphabet isn't playing one game, it's running the entire league. Alphabet stock recently closed at around $252, down from its recently recorded 52-week high of $257.33. Year to date, the stock is up 34%, and its 52-week performance is up 55%. That's an incredible run, especially for a company already this massive. But the question is, can it keep going, or are we looking at the top of the hill? And it's something that's come up in my Discord channel. And I have to say, this is where things start to get interesting, because right now, something big is happening that could redefine how we use the internet. And it's putting some real pressure on Google's core business. Just a few days ago, OpenAI made one of its biggest moves yet: the launch of ChatGPT Atlas. This is a long anticipated AI powered web browser designed to take on none other than Google Chrome. The company calls it the new way to explore the internet, but make no mistake, this is a bold play to reshape how billions of people interact with information online. It's not just competition, it's a full on attack on Google's territory. Now, built around its massively popular ChatGPT platform, Atlas takes OpenAI's conversational engine and integrates it directly into the browsing experience. Instead of typing search terms and sifting through endless links, users can ask questions, get summarized answers, and even interact with live web data, all from a single AI driven interface. It's not just about finding information faster, it's about changing the very way we discover and use it. And that's the kind of shift that can change entire industries overnight. Now, the launch comes as OpenAI looks to capitalize on its 800 million weekly ChatGPT users, weaving AI deeper into their own digital routines while gathering valuable insights about how people search, shop, and consume content online. And that data could fuel smarter, more personalized AI experiences, something that even Google has struggled to fully deliver through traditional keyword search. So OpenAI, they're not just competing with Google, it's outlearning it. Now, for Google, the challenge is real. If ChatGPT Atlas succeeds in merging browsing and conversation into one seamless experience, it could mark the beginning of a new era of AI first search and a direct hit to Chrome's long-standing dominance. And here's the thing: if Chrome slips, Google's entire ad machine might start to wobble. And that's a very real and persistent threat. Chrome is Google's key to collecting massive amounts of first party behavioral and browsing data, which it then feeds into advertising targeting systems. That makes Google's ad platform more attractive than other providers. And remember, Google's ad business makes up 85% of its quarterly revenue, at least in its latest quarter. In plain English, if Google Chrome loses users, Google loses data. And if Google loses data, it loses its edge in ad targeting. That's not just a risk, that's a crack in the armor. Essentially, OpenAI isn't just building a browser, it's rewriting the rules of the internet and taking a shot at Google's business at the same time. It's kind of like watching two titans square off, one powered by legacy dominance and the other by raw AI innovation. So if you're an Alphabet investor, you do need to keep an eye on the news here. And I'll be covering any developments on this front, so be sure to watch out for them in the future because this battle between Alphabet and OpenAI could reshape not just search, but how every tech company fights for attention online. Now, with all that out of the way, is Alphabet stock a buy? Well, a consensus among 56 analysts rate Alphabet a strong buy with a high target price of $310, suggesting as much as 23% potential upside from the latest close. The average score is 4.59 and has been relatively unchanged over the last 3 months. So it tells you that analysts still believe in the fundamentals, but markets don't always listen to analysts. I've learned that when consensus gets too comfortable, that's usually when the reality shows up to test conviction. But what do you think? Could OpenAI's Atlas platform challenge Google's dominance, or is this just another case of overhyped disruption that fizzled out once the headlines fade? Let me know in the comments below. And while you're there, don't forget to like and subscribe. It helps others find the video, it supports the channel, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today in this video. I want to thank you so much for watching, and I'll see you next time.